Vance, where we start is by asking if you, as an individual, were taken by surprise at the pace of conversation around a spot ETH ETF.
Absolutely not. We were one of the few firms that predicted, I think on this show, that it was going to happen. And we've still got a couple of months until it starts trading, so people have time to get into position. But ETH is the clear asset that should have the second ETF. It has the most stable coins. It has higher fee base than Bitcoin. It has a dividend. It's deflationary. This is an asset that people want to own. And so I know the bears were prognosticating for quite some time about how the odds were 10%, or now I think the line is that the ETH inflows will be lower than expected. But we'd happily fade that as well. And we're firmly in the camp that ETH is going to be a huge beneficiary from these flows.
Vance, you said a couple of months. What leads you to believe trading will start in a couple of months, and what you think the regulatory roadmap is from here?
Yeah, so the 19B4s, which is the first part of the process, have been approved. And that was kind of the crux of the political pivot that happened last week. Now you have to get the S1s approved. And there's a lot of complexity in the S1s in and of themselves, but we view this delay as positive. You're going to have that same natural buildup that Bitcoin had once it looked like it was going to get approved. You're going to have additional sales and marketing that's going to happen. And I think the bigger thing is that to some extent, ETH is going to ride the coattails of all the access that Bitcoin has created, the access into the RIAs, the financial advisors, the wirehouses. And so, you think about someone wants to put $1 into crypto, what do? When people think about the Magnificent Seven, they don't go all in on one of them. Maybe they do a peanut butter spread, maybe they go overweight one or the other, but both, or all seven of those are components of a smart investing strategy. We think the same thing is going to happen here.
I don't really know where to go with the peanut butter jelly analogy. If you're talking about NVIDIA, you probably got a pretty thick peanut butter layer and a very small little jam. They're chunky. That's one way of putting it. I always do my best to be consistent and ask the same question consistently when something like this happens, and that is, what are the principal differences in Bitcoin spot ETF, Ether spot ETF? But I guess what we're actually asking is the principal difference between an Ethereum-based blockchain and Bitcoin blockchain.
So Bitcoin's digital gold, right? And you can view the rigidness of its roadmap. There is no future roadmap for Bitcoin being either a feature of a bug or a bug in the sense that Bitcoin is going to be Bitcoin for the next 100 years. ETH is at the forefront of the tokenization movement that is going to really define the next few decades of traditional finance. We're going to start with the stablecoins, the $100 billion of stablecoins that are on chain today. But now BlackRock's bringing on fixed income. People bringing on equities. People are bringing on commodities. People are bringing on private credit. And so ETH is at the forefront of that movement, and it's also just a very different asset. It does about $2 to $3 billion of profits per year. It dividends those out. The asset itself is deflationary. It's proof of stake. It's a very different asset than Bitcoin. I would say it's more of a tech-style growth play. And if Bitcoin is digital gold, ETH is Apple. It's building the App Store of finance. And just like people thought that, the App Store was a toy or a gimmick, 10 years ago, people are going to be really surprised at the uniqueness of the fees and just the scale of the business that ETH is going to generate from the tokenization wave that's taking place. And it's Larry Fink, it's Paul Tudor Jones, it's all these guys. They're all on this train.
Okay, so the Vance Spencer call is that ETH is Apple. Kavita Gupta was on the show on Friday and said it's digital oil. If Bitcoin is digital gold, Ether is digital oil. I'd love to talk to you about kind of the ripple or secondary effects of what might happen if the approvals come as expected. We talk often in our Bloomberg News coverage on this program, the Ethereum blockchain is the most commercially used globally. There is a DeFi component to all of this. What is the sort of crystal ball into the future if the approvals happen in the cadence at which you've set out?
Yeah, so I think we take pride in we manage just around $1.8 billion today. We're a venture firm at our core, but we play in the liquid markets as well. And we're one of the few firms that's bought 9 figures of crypto pretty consistently on open market exchanges over time. And I can tell you from firsthand experience that moves the price pretty meaningfully. And ETH is a much smaller asset than Bitcoin. It's a much more reflexive asset. There's much less of it available. if you have, even pro rata the share of flows to Bitcoin by market cap, that is going to make a significant impact in the market structure and flows of crypto writ large. And so you can think about it back to 2020. 2020, Michael Saylor was on the scene. We were buying digital gold. That was going to be the only asset that we were going to buy in that bull run. And sure enough, ETH Bitcoin, the ratio between the two went up 3x in the span of 3 months. And I think with this catalyst, with the setup of the relative lack of supply and just the narrative that these are not just pet rocks that sit around and we call stores of value, but they're things that we actually build with as technology, that's going to be a huge tailwind for ETH. And so it's hard to overstate just how positive we are. And this is kind of a surprising decision for a lot of people, the ETF, but this has always been baked into the cake for us.
Vance, you used the word political earlier in this conversation. It's an election year. We have a presidential election in this country where at least one of the candidates has tried to make crypto a battleground topic. Does this approval process for spot ETH ETF have any relevance to that?
Absolutely. There's 60 million of us in the US that hold crypto. There's hundreds of millions, if not a billion globally, that hold crypto. In a lot of these emerging markets as well, there's more wallets on crypto accounts than there are bank accounts. Like, this industry is not going anywhere. And I think it's, the Democrats that have finally gotten the memo on this. And it's amazing to see, the party that I call home finally pivot on this decision. And FIT 21, which is the regulatory clarity bill, provides a pathway for stablecoin issuers, application developers, people who want to tokenize assets to stay in the US. And that is so important. Tether, which I think is the 30th largest buyer of US treasuries, is overseas. That is absolutely embarrassing. And we want those industries in the US. And so, we should be rooting for any growth industry with entrepreneurs and real technology to stay here. And I think that's finally what's happening politically.